YouTube, what's up, YouTube? Facebook, whoever else, how y'all doing? I don't know what I'm doing, but how y'all doing? Happy New Year to everyone. I hope that your hangover is gone by now, because I know you probably got white girl wasted. You was celebrating, everybody was celebrating. Now it's back to reality. What's going on? All the inflation, all the violence, blah, blah, blah. What I like to do in my life, I just remove all that noise. Anyways, before I drift off, in this video, what we're going to talk about is we're going to talk about what is a watch list. What is a watch list? I know you heard of a watchdog. What's a watchdog? Even though the two don't really have a correlation, but just wanted to emphasize on the watch part. And I didn't mean to put dog here. I meant to put list. What is a watch list? All right. A watch list is a list that you keep a watch on. And in this case, this is my watch list for crypto, for me trading crypto. This is a watch list I made, alright? So in this watch list I have 1, 2, 3, 4, 5, 6, 7 positions. Alright? Now, over the years, while doing this, I picked up on something that was very strange to me, right? And what that was is how you can have multiple positions. You might not know this because when you're only looking at one position and you're stressing over one position or whatever, or you flip-flopping and you're looking at different positions at different times, right? You're gonna see so many different, stuff going on. So many, all this. Every time you look at a different chart, you got so much noise going on. I like to call it noise, right? You got so much noise going on. But when you have a watch list, you might see something that might look like this, right? You might see 1, 2, 3, 4, 5, 6 positions that look exactly the same. All right. So what I noticed is that's when you really realize that the stock market only does 3 things. Now, when I say the stock market, I mean the position itself, right? The movement of the price, right, which is going to be the tip of each of these is like where the price is at currently, okay? When I realized this, I was like, wow, this is pretty cool. It takes out a lot of jumble confusions, right? So, in a nutshell, you guys seen the first post I made. I took my first profits for 2023, first trade, right? So, from that position, I'm looking to place another trade. So, what am I looking for? Okay, what am I looking for? My style of trading. How I'm able to jump into the market and jump out of the market, all right? What I look for, I figured something else out. I figured this out. I figured that, one day you're gonna always see 2 colors, right? You're gonna always see 2 colors. in this case, I have, different color settings on my screen, but for the most part, you're going to see red and green. Okay. So when a position is red, it's not going to stay red forever. Same as when it's green. It's not going to stay green forever. Vice versa. Okay. So in this case, on my screen, this is gonna let's just consider this red, for your brain. So we know red is bad and green is good, right? Just like driving a car. So we see all the green positions are in positive positions. So this one here is plus 1.78, right? You can read, right? Okay, this one being the highest. This is the position I just sold. I kind of wish I would have held because you see what it did, but that happens when trading. When you take your profits, be happy with that. Don't really look back and be like, oh man, I should have held it a little longer because look, it went higher. You'll make many mistakes moving forward, all right? So what I noticed is this. It took me back to when we was in school, and I don't know the name of it, but I remember it. It took me back to when we was in school, okay? And I remember this graph, okay? Who remember this? Who remember this graph? Y'all remember this? So here's what I noticed. I just threw percent signs there. I just threw percent signs there. And what I realized is this. So let's say, for example, the first position here, which is down 1.40%, we're going to go ahead and round it off to 2%. So that position is here right now. Eventually, at some point in time, this position will read a positive, whatever. Let's say positive 3. Okay. So now, what does that mean when that happens? Well, my brain figured out that when it goes from 2% and it moves 1, 2, 3, 4. I could be off by 1. Okay, whatever. Get the drift. So we're gonna go 1, 2, 3, 4, right? From 1.40%, whatever. All right. So let's just say roundaboutish. It's at 3%, right? So 1, 2, 3, 4. So you make 4% about, okay, on your investment. If let's say you enter right now, you just gotta wait. Now, there are other little baby tactics involved in this, but in a nutshell, at a glance, doing this at a glance, this is how I make my decisions when I'm going to jump in and when I'm going to jump out. Right? Now, this might seem easy. Oh, wow, that's cool. But there's so many other things that take place, such as emotions and stuff like that. So, as you guys know, I've been trading a while now, off and on. Sometimes more serious than others. But no matter what you're doing with this, as you continue to do it, you get better and better and better and better and better and better. All right? You get better and better every time. So right now, I am waiting for a position to do this. I want to see this or more. Like it could be 7, right? Then I'll make my entry point of $100. And just wait. So let's go. Let's jump into Litecoin. I currently don't have any holdings in it. I made me some support and resistance lines, which let's go to the 3 minute. I'm waiting for like a nice drop. And I'm waiting for this to turn red. So it might happen sometime later today. The low is 70.02. It's the high. And this is where we are now. So I just have to be patient. Patient. This big jumper did. So I did support and resistance earlier. And as you can see what happened, it broke out. All right. I was hoping it broke down, but it broke up and I wasn't in it. It's cool, missed. So the next thing it's gonna do is sideways, little down. Have to wait, just wait. Patience is the key. Patience is the key. That's how I make my picks, ladies and gentlemen. I don't really care what the company is, what the position. I'm more of a technical trader. I'm a tech trader. I'm a technical trader. I'm not gonna try to spell the rest, but that's what I do. Now the one downfall, and this happens to most traders, you can have 10 trades and do pretty good. And it'll be that one trade or a combination of two trades that wipe out all your good 10 trades. And then you might go sit down for a little bit because like, oh my God, can't believe that happened. Then you lose focus. So one of the ways to prevent that is just keep on practicing. You have to keep on practicing. It's the only way you're gonna get better. You have to learn how to control the emotions. But anyways, what is a watch list? You guys get the drift now. What is a watch list and the benefits that it have and how you can use it to your advantage. All right. Also, when you have a bird's eye view of multiple positions, it saves you a lot of stress going through each one by one. And I could look at these green ones real quick, and you know that this is not a good entry point because it's at the top. All right. You know that whenever a stock does an uptrend and it reaches its high point, the chances of it breaking through and going more is kind of slim because more than a little bit when it reaches a high point, it's going to drop. Okay, so therefore we wait. This one is okay, but it's not deep enough. I want it more deep. And the deeper the better, because that's the more I gotta climb back up. All right. So if it's like, for example, it's down 8%, and I gotta climb up that 8 points. All right. So you're already 8 points before you even get to 2%. You see, so 2% for some would look like it would be 2%, but for you it would be 8. For you it would be 10% because you had a good entry point at 8%. At 8%, I'm just giving some examples here, right? So until next video. Until next video. The skill set takes a long time. For some of you, you'll get it way faster. You guys ever see the movie with the Karate Kid, wax on, wax off? You hear this story sometimes the teacher can teach you some skills, and you can take the skills and master it and just be super good at it. But the one thing is you must start from somewhere. This skill set can help you earn some extra money on the side. This could be like a side hustle for you, not for you to take your whole life savings and dump it into this and start playing around. No. When you hear those stories of people losing their life savings to crypto, when you hear people losing their life savings to like stuff like that, you know, sometimes I might sound kind of harsh, but I don't sometimes always be 100% feeling sorry for them, because I don't know how can I say this. A lot of those cases now, the cases where people were like really uneducated and they was just investing their money for retirement or whatever, stuff like that. Okay, I feel sorry for those. I do not feel sorry for the greedy ones, because in their heart and soul, they were being greedy, right? A lot of times in this trading stuff, you think you're gonna get rich overnight. You think you're gonna get lucky. Does it happen? Yes. Does it happen all the time? No, of course not. If it did, everyone would be rich, right? All for this. But a lot of greediness is involved. A lot of laziness, a lot of lack of education, a lack of wanting to learn. Because a lot of basic stuff, as far as a lot of people used to ask me, oh, why you don't trade crypto in the beginning? I ain't know nothing about it. I ain't know nothing about it besides Bitcoin, but everything else that was popping up, yeah, people was making their money, and it's designed to do that. A lot of people jumping into a position, it gives the price action going to be moving. It's going to be doing things that's not normal. A lot of stuff that happened in 2000 and moving forward after that with the meme stocks was not even like, if you had the basic understanding of the stock market, you knew that stuff that was happening was not even normal, and it wasn't normal. It wasn't regular stock behavior, but it was happening because of all the craziness that was happening, right? So a lot of people jumped in and they had some FOMO. What's FOMO? Fear of missing out. All right, and what that means is fear of missing out is they might have seen a video or whatever, or heard from a friend. Oh well, I made so much. Yeah, what little how blah 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 blah. Then they went and took all their money and dumped it at the wrong time or something, whatever the case might be. They went and dumped their money into a company who just opened up and whatever. But I'm gonna get off that topic because I have videos posted where I state like with the education, when you learn this, when to get out of a position. It would tell you get out. The chart would say, hey, bro, I think you better get out now. I think you better go ahead on now. Take your profits. The chart would tell you that. It would tell you. But of course, because of the emotions, you ignore all of that stuff. wiped out. You're gonna blame everybody else but yourself. But anyways, happy New Year, ladies and gentlemen. Sean Wiggins. Until next video.